Hello everyone, today we're going to go over my Robinhood Roth IRA portfolio recap for the month of August. Today is September 2nd, Labor Day. However, the market has not been open so far this month, so we're choosing today to go over a recap. So currently, my portfolio value stands at about $14,488. That's up 1.11% in the last trading day, about $159. Looking at the last week, it's about $35 we're up. And then within the last month, that's $913, which is 6.73%. Now, if you haven't been tuning into the markets, that might seem pretty extreme. But when we take a wider lens, about 3 months, you'll see why we're up so much in 1 month. So we were rallying quite high. Our portfolio value almost hit about 15,000. However, about in the next 2-3 weeks trailing after that, the market just continued to drop and drop. We went from almost $15,000 to almost touching 13,000, and we could have saw below that with another bad day, honestly. But then after that, we had a continual rally up to our current position of about $14,500. We saw this large drop in 1 to 2 days, which we can see here, and that was about a 6% drop, which is very uncommon for the market. However, that we saw that probably came from factors like the Japanese yen trade, with having a lot of sell-offs due to interest rate arbitration just not quite being there anymore for them. And in turn, that resulted from a huge outflow in the market. But then people saw a lot of buying opportunities in that. That stocks just weren't quite valued at what they probably should have been, especially when you get a 6 to 7% drop in overnight trading. You're going to see a lot of upward momentum that morning, which we saw in the day closed maybe about -3%. And then continually after that, we just saw tech stocks, even average stocks, just continue to rally up and up in that week, bringing it to our current position. Now, if we're going to look at our contributions for Robinhood for this year, we have $918 put into this account, an IRA match of $27, which is great to see. We love to see that free money coming in. And we still got quite a bit that we can contribute. However, this does not take into account before it transferred over to Robinhood, which was just a couple months ago. So if we look further out, we can see that we transferred in about in the middle of May. And since then, we've been up about 7%, which in that short period of time, it's quite significant. Great progress made there. But we can see how volatile the market has been. And I ended my last video saying I hope the volatility will kind of go away. Yeah, I guess we're not going to see that for a little bit, especially the fact that we're in earnings season, and although we've been through a lot of earnings, we've seen great fluctuation in stock prices, some that necessarily don't make sense that we've seen. So before we get into particular examples that happened in this last month, let's just look at my holdings. I have QQQM for $9,123 just about, which is about 46.5 shares. I have QQQM rather than QQQ. Due to its lower expense ratio. I really don't care about trading volume considering I'm not trading options or anything like that. SPY, we have about 2.13 shares, which comes out to $1,200. VOO, or VOO, 8.03 shares, which is about $4.16,000. And then you'll also see that CrowdStrike is in here, which is quite interesting. I typically just stick to index funds and don't really venture too far beyond that. However, I was listening to a recap on the stock, and although I just have like a $4 buy right now, I might look to continue to increase that as I just take my time, do some due diligence on the company. However, I'd like to make a buy within the next month rather than waiting too long and letting the stock value rise up. So we'll look at that stock quick and kind of get into what I was thinking there. So CrowdStrike, we saw this in the news recently. It caused companies all over the entire world to have outages with their Microsoft computers as they rolled out a security update. And as a result, it knocked the computer offline and required manual resets on every single computer, which is a huge deal. And if you were to take a guess at the chart, you could see exactly where this happened. We saw on July 15th, overnight this happened. It went from a value of 377 to about a week to $263. So you lost, gosh, almost 30% probably of that value simply in the span of a week. And then it continued just to go down to all the way 217, which from 377, that's probably 40 something percent of a decrease. And whenever you get a huge sell off like that, you need to take a second to look, hey, is this warranted? In my opinion, that was a huge deal for CrowdStrike. I mean, a huge issue that just should not have happened. It costed companies millions, billions of dollars all across the world. And as a result, yeah, the stock price should decrease. It makes perfect sense. However, should 40% of that company's value decrease in the span of a couple weeks? That's where I look at it, I get a little skeptical. And I just don't think it was an honest and fair valuation of the company. I feel like a lot of that came from panic selling and thinking they were going to get dropped by all these companies. Now they had one big, granted, misstep. But we see that that hasn't happened. We saw that Delta put a lawsuit out towards CrowdStrike, and that's a big deal. But it has come to light that CrowdStrike has offered services to Delta in that time period where they're having issues, and Delta actually denied CrowdStrike, making their issues span longer than it should have. They had to put people in hotels, rebook flights, costing them multiple millions of dollars. However, that fault lands on Delta most likely because CrowdStrike reached out and Delta declined them. Maybe they were upset with their service, but they want to take matters in their own hand. And as a result, that just led to the issue not being solved when it should have been solved. And we saw companies like Microsoft and other major firms around the world that did take CrowdStrike's lending hand, and their issues were solved in a couple hours. So CrowdStrike had a really good response to this tragic event that they definitely weren't prepared for. And I think we've seen that in the recoup of the stock price. So we had a low of $218 about here. Now if we're going to look today, we're at $278. So if we're going to maybe look, let's look at the last month. Yeah, the last month is pretty accurate at that time frame. You had a 18% jump in value. 18% in a month is amazing returns, and that comes from people looking at a buying opportunity of this company that a lot of people overlook, wouldn't touch with an 8-foot pole. However, people understood that, hey, maybe this has been knocked down a little too much. And I would agree with them. And I'd say that, I mean, we've had this upward trajectory from the low 200s to nearly 300s. I think the stock could, I'm not sure if it would go all the way back up to 380. I mean, there's definitely reputation that's been injured. You might see some decreases in revenue as they lose contracts. However, 300, I think it can definitely break. 320, I think I would sell at. I don't really deal with individual stocks too often. I don't have time to go through that evaluation. However, this feels like a no-brainer, so I'm going to take another look at it in the course of the next week. Put some extra money in there. Nothing crazy, but it's not bad to dip my toes in. So by the next time, we'll have another portfolio overview for the month of September. You'll probably see CrowdStrike in there, and that's why. Look at NVIDIA. I feel like we have to talk about this one every single month because there's just always news going on. This was one of those companies that had a major earnings review that they had to go through, and they beat their expectations. I think they beat them by about 18%. And with that being said, you would think that, hey, we would see a huge jump up in the stock price considering they blew out their already high expectations. However, the market was almost expecting more from them. So although we got an 18% beat in their revenues, we saw that the valuation of NVIDIA did not just stay the same, but actually decreased slightly. So we're trading at about 130 here. Then earnings came out and it went down to 120. So you lost 10 out of those $130 of valuation, which when it comes to a $3 trillion company, that's a lot of money. So I think this kind of hints to the fact that NVIDIA, although it has been incredibly rampant, I mean, we can look at the chart anywhere here and you're going to be up a crazy amount. You see this huge valuation on it. We're going to start seeing some of that momentum slow down and quite frankly, the company not have that as much growth as possible. And this makes a lot of sense. I mean, if you're going to look at the market caps of some of the biggest companies, Google, Apple, and now NVIDIA, they're all around that same point. How much more can NVIDIA grow realistically? How much more can the valuation go up? I would say that it's probably getting close to the peak, and I could definitely be wrong, but it doesn't warrant reason for the company to continue to grow. I feel like they have issues of future revenue. when these major tech companies, which are their main sources of revenue, stop buying into the chips just because of the AI craze and having to innovate with this new technology. When it comes to that point, NVIDIA is going to have to find a point to pivot to. If they want to do cloud computing for other companies, that's definitely a revenue avenue they could take. But they could continue to sell AI chips on the side, maybe develop some new technology for these companies because technology will continue to be on the rise. However, with that being said, will the market respond great to that lackluster revenue in the future? We'll see. Maybe it'll stay at the same valuation. It could swing down 10% in a couple days, which we've seen before. It could swing up another 20%. I don't think it's going to double like it has been in the past. I can't really see it breaking 50 anytime soon or anything like that. That's a lot of money being needed put into the company. However, with that being said, it could go either way. Another company I wanted to highlight was Delta Airlines. This comes from the fact that about a week ago, a week and a half, they had a tire blow up on one of their airplanes, killing 2 workers, injuring other people on board. And this reminded me a lot of the Boeing situation when they had their doors flying off mid-flight, not the safety precautions taken into play. And we saw that when it happened, we were up about 1.2% prior to that, all the way down 1%, so it's about a 2% drop in stock valuation. But since then, it has been up 2.68%. So I guess the reason I want to talk about this is it brings up a concern of mine that people aren't necessarily valuing individual stocks as they should be. Personally, I think if a tire blows up on a plane that shows a lot of underlying issues within the company, well, it might be a one-off. But with that being said, there's definitely a chance that it isn't a one-off, and there's going to be other issues on other planes that's going to cost money. I mean, their reputation definitely took a hit. No one wants to fly on an airplane that has exploding wheels, killing people, injuring people. So something that I'm going to probably keep an eye out for in this next coming month, see how the price moves. And then the last stock I wanted to talk about today was Apple. We see that it's at a valuation, well, it's at a price of $229, up 22% year to date. And it does fall in the earnings season as well. And we can see that the price has kind of stayed pretty lackluster in the last week, up 1%. The last month it's up 3%, which is pretty good, but considering the market has rallied quite a bit, nothing too impressive. Last 3 months it's up 20%. But a big reason I want to talk about Apple is that they're releasing the new iPhone this month. I think that's going to be a great revenue driver, definitely. And if I wasn't in index funds, I would probably be buying Apple right now. With that being said, Apple does take up a pretty good chunk of the index fund, so I have a pretty good exposure in Apple, which I'm happy about. And I think that this coming month, at the end of it, and probably more into that October, November recap, we're going to see a lot of movement in the Apple pricing. So I continue to remain bullish. I think they did a nice play with AI, requiring new iPhones require these AI chips. So you need to buy a 15 Pro or higher just get the AI capabilities of these phones. They just released a new AirPod. You got a lot of future products that will be released. So it's nice to see. I think it's almost requiring a lot of these customers that have become stagnant in their buying of Apple products to come back into the market and continue to buy more and more from them, which is obviously great for Apple's revenue, but kind of got them out of this tricky situation where we saw declining iPhone sales and declining sales of other products that they can now implement AI into. So hopefully that kind of bolsters up their already great revenue as is and puts them on a better growth trajectory than they were before. So some things I wanted to talk about regarding my portfolio value. We can see that we started at 2,200. Now we're at the mid 14,000s. And we can see some interesting factors within these last couple months. We had this point where we decreased in value month over month by quite a bit, about 8% probably. And that, although it doesn't capture it here, this dot should be probably quite a bit lower because middle of the month we lost over $1,000 worth of value, and that was very tough. And I felt like that was a wake-up call for a lot of newer investors, especially if you've just been investing in the last year and a half, where you saw this just incredible bull run of prices only going up, stocks only go up, don't have to worry about any of that. But we've seen a lot of pullback. I think people will become a little more realistic on, market. They're becoming a little skeptical. They think things might be kind of waning a little bit. So I think in the next month too, we're going to see a lot of that play out. We're going to see people show their skepticism, prices wavering more. Some of these companies that are incredibly favored, like Nvidia, will probably start to drop in price a little bit. All things to keep in mind. And just as a recap, I like to do this every month. We can look at my contributions, where the portfolio stands right now. So we see that year over year, we've stayed pretty consistent in the amount that we've invested. I definitely want to ramp it up a little bit for 2024. We still got quite a bit of ways to go. However, I'm looking to graduate soon, so not definitely my main priority, but it's up there. We're at 1,500 for the year so far. I'd like to double that for the year, get it to 3,000, kind of remain into play with past contributions. I mean, last year we were a little lower, but I think we could hit 3,000 for the year. Pretty optimistic about that. Since we transferred over to Robinhood, we put $918. I've been just incredibly hammering that a lot more and more. Our total contribution in our account is $10,500. The portfolio value remains at about $14,500. You can see that this remains in a profit of $3,900 or 37.2% non-weighted return, which is great to see considering I've been in the market for about 4 years. If you wanted to take just the mean of that, that's about 12%. However, that does not take into factor that I've been investing continually over time. So if we wanted to get a more accurate result, we could just look at probably VOO since 2021 and see how our portfolio has gone up over time. So I mean, if we're going to look at 2021, I would have been in about February there. VOO was at 350 and now it's been up to 517. So that's just incredible difference in that time period. I think we've just made incredible progress. I don't think the bull market will continue to rise like this. I can see a bear market realistically. We're not having the best economic indicators. However, that being said, I never know. So we'll just continue to dollar cost average into our positions and reap the benefits as we go. So thank you everyone for tuning in for the month. I hope you enjoyed the video. Next month's going to be incredibly eventful, so make sure to tune into that one. And I'll see you guys in the next one. Bye.